Well, Ren, gave myself the challenge at the start of the year to 10 bag. Well, actually in February to 10 bag. So it's been hard.
Yeah, so Bryce has given himself $500. He said he's going to turn it into $5,000.
I'm going to try and turn it.
Okay, well that's an interesting caveat you're putting there.
Yeah.
Now, as you've described previously, that requires, if you're going to do it in a linear fashion,
Yes.
that requires you to achieve a 23% a month growth rate.
23% return a month.
Yes.
Yeah.
I keep saying that I don't think you get this linearly, but give us the numbers. How are you going? So February, I think you hit your 23% goal.
Yes, I hit my 23% goal in Feb. In March, I needed to have finished with $760 in the kitty.
Yeah, so just to be clear, February you got 616, which is what you needed.
Yeah, 616.
Yeah.
And I had over that.
Oh, that was the goal.
Yeah, that was the goal. Yeah.
And so the goal for March
was
760.
I finished with 720.
Okay.
So I was feeling good.
Okay.
I was slipping. I was feeling good. So the last update on the show was the 13th of March. So what I'll do is give an update of what has happened since that point in time.
Perfect.
So at that point in time, in my portfolio, I had Super Micro and Antipa, the Gold Explorer, and we've spoken about Super Micro, both of which were going well. They were in the green, but they'd started to sort of slow down. Super Micro, at its absolute highest point, I'd actually made 115% on.
Yeah, but then you wrote it all the way down.
But I wrote it all the way back down, and this is going to be a theme that you're going to start seeing play out.
Okay.
Antipa, I was up about 54% at its highest. At this point, I was up about 20%. So
you need some stop losses.
I know. And so I spoke to Luke about a company called Strata Minerals. So I rotated out of some of Antipa and went into Strata Minerals. This was also a Gold Explorer. It was pretty much flat. Towards the end of the month, everyone was really starting to ramp up. Towards the end of March, everyone was really starting to ramp up the conversation around Liberation Day.
Yeah.
And I was like, look, I really need to take a pretty concentrated position here either way, because I'd split Antipa, I'd split Super Micro, and I just needed to go all in on something because I was starting to sort of falter.
Yeah.
So I sold out of everything, and on the 31st of March, I bought a stock called SNAS, and I spoke about this on Instagram. The ticker is SNAS. It's the Global X Short NASDAQ.
Nice, the ETF.
The ETF. Yeah. So it was up to 250% or just over 200% or times 2 leverage.
Oh, it's leveraged.
Leveraged,
okay. So a leveraged short NASDAQ ETF.
Leveraged short NASDAQ ETF.
The last throes of a man was falling behind.
On the 31st of March, knowing that April 2nd was Liberation Day and that surely what Trump was going to announce was going to unsettle the market.
Okay. So we can skip over this bit. You were right, blah, blah,
yeah,
blah.
No. This is it where I'm going to take my glory. But what I didn't do was go all in. I kept a little bit on the side because I'm just like, I don't want to wipe all of my money.
Yeah. Like the worst outcome for you in this challenge is you end below $500.
Yes. Yeah. Well, someone even tweeted Bryce trying to turn 500 into 5,000, only 5,400 to go. I'm not in the negative, that's for sure.
All right.
Look, long story short, market started tanking 4 days later. I was feeling like a genius because it was a 2 times leveraged short NASDAQ. So I bought more on the 7th of April. Now, if you look at a chart, the 7th of April is where I was all in, and that is the peak, or I guess the trough of where the market the following day then bounced 10%.
Yeah, that was one of the NASDAQ's best days.
Best days ever, yes. Yeah. And so I had a stop loss in for not to lose my money on the position.
Okay.
And so effectively what I'd done is ripped about 40% over 3 or 4 days, and then ripped right back down, but then sold out of everything when it ripped on that best day ever, because it ripped sort of 10 or 12%.
Yeah, but for you fell.
For me, I fell. Yeah, so I fell 30 odd % on that day.
Okay, so that was a big roller coaster ride, and you were back to square.
I'm back to square one.
Not back to 500, but
No,
back to
no.
like the 700 or whatever.
Yeah, so I went all in on 720. Stop lost out, including a bit of brokerage and some losses on Strata Minerals. I'd lost all my gains, missed the top, and now I'm actually at 706. So just to close this out, since the last update, the Nasdaq is down 5%, the S&P 500 is down 4.5%, the ASX is flat, and I'm flat.
So if you had just held the Nasdaq double short Nasdaq ETF until today, you didn't have a stop loss on, you would actually be in a better position.
No, well, if I'd gone all in.
Because it's fallen a bit since.
It's fallen a bit since, yeah.
It's like down from where you bought it.
It's down from where I bought it.
Yeah.
Just. Only 4% down.
Yeah.
So I would be in a slightly better position. The annoying thing is Antipa is up 25% in the last 5 days.
And you're out.
And I'm out. Yeah. So I would actually be in the 800s now if I just stayed all in with Antipa.
Oh no.
Yeah. So that's really annoying because I got in on that at about 20 cents. It's now up to 54 cents. So I could have almost doubled that. Yeah.
You would have you got in at 20 cents. It's 54. You would have more than doubled.
Yeah.
You would have almost tripled.
Yeah. So I'm getting a few. This is becoming really frustrating. So now I'm all in cash. I'm all cash, which is the worst place to be when I'm trying to get 23%. So the big learnings here are timing the market is obviously a fool's game. Don't do it. It's no good. Knowing when to sell is obviously another really important component here because you can make the right call on the way in. And I've got a voice note here that I'll close out with Luke because he heard an interview that I did with Ben and sort of had some comments. But I think making these sort of macro calls, which I think when you look, you've got to get two things right, which is the way in and the way out. Yeah. It's like if the long-term investing we do, it's kind of just like, sure, you need to make some sort of long-term call, but the intensity of getting 50% or the right call on the way in and then knowing when to get out in the short term is just unbelievably difficult.
The irony is, though, for every position you've sold, I'm not sure about Supermicro, I don't know where it is now, but for every position you've sold, you would have been better if you hadn't sold.
I know.
Short Nasdaq, you would have been better. Antipa, you would have been better.
Yeah.
Oh, I don't know about the
Strata Minerals. No, so it's actually tanked about 40%.
Oh, really?
So yeah.
Okay.
But that happened before I got into it.
Supermicro probably has fallen more with the market.
Well, it was, as I said, up about 115%. But you're totally right. The lesson here is the emotion that drives trying to find 23%. Like forgetting that you could do that over 6 months if you just let things play out. Like in the last 5 days, Antipa has done 25%.
Yeah, the irony is that people who had never heard about Antipa before you started speaking about it, and if they just held it, are better
killing
off
it.
Than you. Yeah,
are better off than me.
They'll soon. Yeah.
Yeah.
So look, I think you've got quite a negative slant on this. To be fair, you still are up more than 40%.
Yes.
It's just not 1,000% that you need to be.
Yeah, well, that's the thing. By the end of April, so within the next couple of weeks, to stay on track, I need to be at $937.
Okay.
So I need to find effectively another $240 in 2 weeks to be on track, or just acknowledge that if I find something that's going to just keep ticking away,
you should just go.
I'm eventually going to get there. So guess what? Triple long Nasdaq.
$240. Just go to a Uber Eats shift.
That's not the game.
Yeah, I think you.
But I will get there.
You can't chase this.
Yeah, I know.
You can't get
that's
desperate.
yes.
You can't go like
right.
you can't go like, oh, now I got to go quadruple leverage.
No, you can't. That's the lesson from but it's kind of like, yeah, you get enthused by trying to get, making these calls around, when to try and get in, but then it can just all come crashing down so hard. So I think, trying to find something that's just going to tick away for 3 or 4 months now is where I'm at.
Okay.
Yeah. So if anyone has any ideas, let us know. But But yeah.
Did you have a voice memo from Luke?
Yes. So I'll close out here. Luke obviously has a few opinions on how I've played the last month. So we'll close out today's ep by hearing what Luke has to say about my journey.
All right. Well, that'll do us for today. Enjoy Luke as we leave you. Make sure you subscribe so you don't miss an episode. Don't miss the next update from Bryce. And if you enjoy this episode, give us a rating or review. It really does help new people find the show. But that'll do us for today. Over to Luke.
Nice.
Brycey, Luke here, mate. Just thought I'd drop you a quick note on the back of your episode record with Benny last week, and that convo you had about double short Nasdaq ETF and how you sold Antipa for your 500 to 5,000 challenge. I just wanted to point out, I suppose, two common investor mistakes that I see that you've just made. And the first one is you're smart enough to buy, but you're not smart enough to sell. And essentially, you've bought this thing, the market's gone down, it's worked for you. But by the time you've figured out it's time to sell it or you want to sell it, you're already losing money again. And I suppose it's really symptomatic across the Equity Mates community from the people that I've spoken to, and also, all sort of investors more broadly. They're good at spend a lot of time, picking the right investment, but they're not enough time managing it or, thinking about valuation or thinking about profit taking, and they're really good at buying, but not very good at selling. And the investments they've got that have gone up, they never want to sell because they're green, and they make them feel good. And the investments that haven't gone well, they end up selling cheaply and are overly loss averse. So, look, just I suppose a word of caution on that. And I think second, obviously, the idea of trading ETFs or leveraged ETFs in the short run, I think is pretty problematic. It's sort of like a lotto ticket type stuff where you're taking an investment with really no underlying thesis beyond it went down yesterday, so it's going to go up today, or it went down yesterday, so it's going to go down tomorrow, which is, a coin flip at best. And particularly when you're funding it with investments where you've actually got a good fundamental investment thesis. I think that idea that the momentum is always right is problematic and will lose you more money than it makes. And I also think that, being bored or not having enough entertainment, I suppose, from your investments is a quick way to destroy your capital. If you're having fun and it's feeling sexy, you're probably going to lose money, in my view, and that's in the markets, in business, in almost everything that I've ever seen. So sexy is not normally profitable, and profitable is usually boring. So just a couple of thoughts for you, mate. I was sitting there listening to you guys chat away, wanted to interject and didn't get a chance. So hopefully that's of use to you. Good research is out. Tomorrow, the 15th of April, new little three-bagger in there for you, horsey. I reckon that is a nice little industrial company that no one's ever heard of, so well worth a read and might be suitable for your 500 to 5,000. Got any questions about it, just give us a buzz. All right, chat to you soon. Bye.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful. Equity.